Everybody to the, that was a little loud, to the Finance Committee meeting for May 25th, 2022. Madam Clerk.
First, we need adoption of the agenda.
Commissioner Santos.
Thank you, Mayor. I move that we adopt the agenda and adopt the minutes at the same time.
Is there a second?
Second.
Any public comment? All right. All in favor? Aye. Any opposed? All right. We have an agenda and minutes, and I am the chair, not the mayor, but thank you.
You're in the spot.
Okay, Madam Chair.
Next, we have item 211259, Gainesville Regional Utilities internally prepared budget to actual comparison for the period ended March 31st, 2022.
Thank you. Yeah.
Thought that was announcing my presence.
We all deserve intro music. That's it.
Okay, I'll take it. Mr. Chair, I've got a couple brief comments. I'm not going to go through this report in any type of detail unless the committee prefers it, so just let me know. As of March 31st, 2022, the net impact to the rate stabilization fund on a combined basis, as measured by budgeted net revenue versus use of net revenue, was a positive $6.2 million. The primary components of that variance were revenues net of fuel and transfers to the rate stabilization fund were about $4.4 million greater than budget, and that's about 2.76%. The primary driver behind that was about $3 million in interchange sales revenues that we did not have budgeted in 22. Expenses were about $4 million, or 5.3% below budget at that point. Once again, the primary driver in that is our vacancy rate. We budget a 6% vacancy rate. As of March 31st, we were just over 11% of our vacancy rate at the utility. And then our use of net revenues were about $1 million more than we had budgeted. That's all on the debt service side because, as we all know, interest rates are rising. Our variable rate debt service payments are a little bit more than what we had budgeted. So.
Okay. Any questions from the committee? Commissioner Santos.
Thank you, Mayor. I just have a question on our electrical revenue. The drop there, is that less people just using less electricity, or is it less kind of customers than we had expected, or?
So what number are you referring to?
Electrical revenue, sales of electricity, down about 2.4% from our budget.
It's more a function of the number of customers. Our actual retail sales were fairly close to what we had projected for the 6 months. They were down about 1%. So it's a combination of a little bit lower customer number and a little bit lower gross sales number.
Thank you, Chair.
You're welcome. Commissioner Sacco.
Thank you, Mr. Chair. Hi. So recognizing like our actual year starts in October, I think for anyone watching, just to make sure they know that, we didn't make 50% of the budget in 3 months. The one I am curious about is our gas system revenue, where we made 75% of the budgeted, hypothetical revenue. Can you repeat again why that one is so high?
Our gas system is a winter peaking system, so we have the majority of our heavy gas sales months in the period between December and February. So in that first 6 months, those are our high volume months on.
So it'll taper off.
Yeah.
Okay. I think that was it. I was just curious about that one. Thank you.
So do we have a motion to move this to the full commission? Commissioner Sacco.
I move that we recommend this report to the full commission.
We have a motion and a second to recommend this to the full commission. Any public comment? All right, all in favor? Aye. Any opposed? All right, that motion passes unanimously. Madam Clerk.
The next item is 211260, Gainesville Regional Utilities FY 2, capital budget versus actual as of March 31st, 2022.
Welcome back, Mr. Benton.
I noticed I didn't get the same intro from the sign. I think we have a PowerPoint. Yeah, there we go. And I'm going to take the same approach that I took on the previous one. I'm not, unless you just want to, I'm not going to go through each one of these slides. I want to give you an overview and then point out an error that I made in the documents that you've got in front of you. So that I'm sure you've got a question about that one number. But at a previous meeting, you asked us to come back with some information on our capital plan, budget versus actual, and that's what we've got here today. It follows the same lines that you saw when we met with you previously on the 23 budget for the 23 capital budget. We've broken it out by line of business and by profit center, and so we're comparing the actual expenses to the budget and giving you a percent expended. The format displays totals by profit center as well as data for significant projects within each profit center. So if we could go to the next slide. And one more. What I wanted to put, this is the total. I wanted to point out one thing on here on the wastewater. I was making some last minute tweaks and I lost a digit somewhere. That's $713,972 dollars of actual expense should be $7,193,000. So the percentage that we've expended on the capital side is it's actually about 31%, 34% if you exclude AMS and CNI, AMI and CIS. The reason that that expense percentage is relatively low is that traditionally the rate of expense in the first 6 months and primarily in the first 3 months of the year, it traditionally lags the next 6 months. They're doing planning, they're getting the projects up and moving. We've had significant supply chain issues. I know you're probably tired of hearing that, but it has impacted our ability to move some projects forward, not only for large equipment or pieces of the capital project, but surprisingly, brass fittings, couplings, even things that wouldn't necessarily occur to you have contributed to slowing that down. And once again, the vacancy rates that we talked about just a minute ago. While the majority of our capital work is done by third-party contractors, us not having the usual amount of staff on the ground still impacts the pace and the rate at which we do the work. What you'll notice about these numbers, with the exception of a couple of projects like the wastewater main street treatment and disposal equipment, most of the capital projects in this year's budget are relatively small, and this is a little bit different than last year when we had a couple of singularly large projects, such as the work we did at Kelly and the gasification of DH2. So I'm happy to try to answer any questions. I think after the last committee meeting when this was brought up, I cautioned that we'd be happy to provide this information, but if you needed detailed information on some of the inner workings of these capital projects, I'd probably have to talk to somebody a lot smarter than I am that can give you that. But I'll try to answer any questions you have.
More specific, not smarter. Yes. Commissioner Saka.
Just a quick question. Can you repeat the numbers slowly for the wastewater, what they're supposed to be?
Yeah, if you look at the wastewater actual, right now it's reading 713,972. It should read 7,139,702. That will change the total. We adjusted total to 35,826,135, which is approximately 31.4%.
Thank you. You said a lot of numbers. I lost one in there. Not that's a commentary to hear. Thank you.
Commissioner Santos.
Thank you, Chair. And you've completed your presentation?
I'm sorry?
Have you completed what you wanted to present?
Yeah.
Okay, all right. So I did have a couple questions on slide 11, just on kind of where the expenditures are either right at it. So I guess if we can go to that one there, yeah. So T&D operations are, so I guess on this slide, both the T&D operations and then also the substation operations. Substation operations is almost fully the budget's actual amount.
The substation operations are almost fully expended. I
Yeah.
believe if you go back to slide 15, you'll see that the bulk of those are in transformer replacements, and that work is substantially done, and so that's why it is primarily spent. I
Okay.
apologize, I don't have the T&D
And are we see-
operations detail, except it's mostly in luminaires, and they've made progress on that project, and it's coming
Okay.
close.
And I guess with the transformers, I mean, some of these are running maybe over budget, a lot of those. Is that because it's the cost of the transformers, or are we putting in more, or is it just the?
It's the cost, as you might imagine, even though we try to look forward as much as we possibly can and lock in prices, we can't do that on all the components of these capital projects, and prices are rising more rapidly than we had anticipated and what we budgeted.
Okay, so we expect this area to break that 100% or to go over budget
There will
significantly,
be
or?
there will be capital projects in the electric side that either aren't completed this particular fiscal year, or where the prices were turned out, the actuals will turn out to be less. What we'll do is we'll look as we get closer to the end of the fiscal year, see where those are, and make any adjustments that we need to.
I have a question on the luminaries as well. That was another one that's we spent over our budgeted amount.
Yeah.
Is that just we're replacing more than we thought, or is that just the cost of the?
I think that's primarily the cost. It's not that we're replacing that particular number. We should have a fairly good handle on how many we're putting in, so it's cost related.
Okay. And I guess in future, like next year's budget, how are we budgeting for, I mean, I guess we're taking these prices, we're gonna do less or more, or I mean, they're saying we have to change the budgets around?
Well,
I know we're not into the budget year yet, but I don't know if that's what.
Well, I will tell you that that the general manager was very firm and very specific with staff, and that we would bring numbers in for the 23 budget that were no greater than the 23 numbers that were included in the 22 and 23 projection, and we've done that. We are already having, I've had discussions this week with some of the plant operators. We are already having difficulty in getting in the queue in the supply chain for some of the items that we're doing on 23. So we scaled back a little bit what we were going to do because we knew that the costs were going to be a little bit greater. We were going to work to stay within that, but I will tell you that from the discussions I've had, even the costs that we accelerated past where they've been in the past, the budgeted costs are going to have difficulty keeping pace with the actuals. So we'll have to manage that as that comes up. We rarely spend more because just the capacity to put some of the things in. We rarely spend 100% of our capital projects budget, so we have some leeway to work with. I suspect that 23 is going to be a lot tougher than it's been in the past, just because of those cost issues.
All right, well, thank you very much, and this was very helpful to figure out where the capital is going, so I very much appreciate it.
And if
Thank
you've got any suggestions or directions about the format and you want to change it, this is our first shot out of the box at what we thought you wanted, so just let us know.
Very good. Good.
Yeah.
So I thank you for providing this. I have definitely tried to be sensitive to not asking a whole lot of extra stuff. I know that we're trying to catch up on other things, so but this is a good framework to work from. This helps understand what we're doing, not just for us, but particularly as we know that we're going to bring on a lot of new commissioners in a few months. That this puts information out there for them to be able to look at it and understand a little better is my hope, as well as the community. Also, I think that's useful. So, all right, can I get a motion to move this on to the? I guess we don't have to, but
I think it'd be good just to.
Yeah, I think it'd be good to pass it on.
I would move that we place it on consent of the next city commission agenda.
there a second?
Second.
All right, we have a motion and a second to ask this to be placed on the consent agenda for the next city commission meeting. Any public discussion? Okay, back to the committee. All in favor? Aye. Any opposed? All right, that passes unanimously. Madam Clerk.
The next item is 211261, Gainesville Regional Utilities Moody's Environmental, Social, and Governance Report as of May 18th, 2022.
Okay, we met approximately 2 weeks, GRU staff met approximately 2 weeks ago with the Moody's team that does our credit analysis. They wanted us to bring us up to speed on their environmental, social, and governance assessment process. First thing I want to say about this is that this part of the rating is already baked into the rating that, incorporated in the rating that we've got, the AA3, or the equivalent of the AA minus. So you could go to the next slide, please. Given the level of interest from the investment community, Moody's wanted to break out. They wanted to give a little more color and context to both to the process and to the impact on that score that came from their ESG analysis. The bottom line is that GRU scored around average in most categories, and we'll talk about each one briefly, and we can go through it. And where we were below average, most of those scores were influenced by criteria that are somewhat outside of GRU's control. Next slide. Our overall, what they call credit impact score is a 3. They ranked 141 power sector issuers. That's in the bar chart that you see there on the right. Their scoring scale is 5 is very highly negative, 4 is highly negative, 3 is moderately negative, and you may be getting the flavor of how they do this. 2 is neutral to low, and 1 is positive. And as you move, it moves from the left to the right. On the left-hand side of this bar chart, it's more negative. And you go to the right, it's more positive. So in summary, we were 3. That's moderately negative. And as you can see from the bar chart, we fall in the middle on an overall basis where the majority of power issuers fall. And it's about average for issuers with fossil fuel exposure, such as GRU. Next slide. Okay, this is the environmental piece, and you can see the factors that they work in there: physical climate, carbon transition. The takeaway is that we have a very poor physical climate score because of our potential exposure to hurricanes. We have an elevated carbon transition risk due to our generation portfolio, and I think it's a good point in time to mention that during this discussion, the credit analysts let us know that Moody's does not consider biomass to be a renewable energy source. So that plays partially into that number as well. These aren't areas that are likely to change, material in the short term. But the primary driver of our 4 here, which is a highly negative score, is the physical climate and the hurricane exposure. Next slide. Social profile. Once again, there are the factors and the scores. The takeaway here is we had a 3, which is moderately negative, and there are 2 factors, according to Moody's, that primarily influence that. It's our higher rates and our relatively low median household income, which is obviously impacted by our high student population. Once again, a couple factors that are not likely to change significantly in the near to midterm. As you can see from the arrow on the bar chart, we fall in the largest bucket here in the middle, and we're about average compared to the power sector. Next slide. This is the governance profile. Our score is a 2. It's at neutral to low risk. The primary drivers here were our higher leverage. We've talked about that a lot. We have a high debt to asset ratio and a high outstanding principal to funds available to service debt, a high GFT, and then the fact that we have an elected governing board that works actually in our favor. Moody's, we had this discussion, we brought this up, we had the discussion that Moody's recognizes the fact that the commission made a commitment to lower the GFT by $2 million per year. through fiscal '27, and they're rating agents, right? They're taking a wait-and-see approach and making sure that they follow through on that. Once again, we fall in the most populated bucket with our two. Next slide. And this is the last one. This is a summary. Like I said, ESG is a continued focus from the investment community, rating agencies, and regulators. Moody's wanted to point out, wanted to make sure we understood they're the first rating agency to detail this criteria and provide some context to how they arrive at the assessment and how it impacts their score. Our overall score is a 3, moderately negative. It's already incorporated in our AA3 rating. We're not going to see any rating adjustments one way or the other because of this. It's that 3 is very similar to other power issuers with physical climate and fossil fuel exposure. The primary factors that influence that overall score: environmental threat of hurricanes, social, higher rates and lower household income, and governance, sustained GFT reduction. So at the end, the takeaway is we are about average compared to other public power and investor-owned utilities from this particular lens done by Moody's.
Commissioner Sacco.
Thank you, Mr. Chair. Mr. Benton, quick question. Whenever somebody gives like, this is our scale, and the scale's always different, can you please repeat the scale? Like,
Yes,
is
ma'am.
1 good or bad? Is 5 good? Like, which way are we going here?
1 is positive. That means that their assessment had a positive impact on our overall rating.
1 is good.
1 is good.
Okay.
2 is neutral to low, which is also relatively good, I guess you could say. 3 is moderately negative. It may have a slight diminishing impact on our rating. 4 is highly negative, and 5 is very highly negative.
Okay, that helps. Thank you. Second question, as far as environmental profile, when it comes to like physical climate risk, please tell me a state that doesn't have something. 'Cause,
I'm sorry?
please, like, can Moody's tell us a state that doesn't have something similar to hurricanes? You're either on fire, have tornadoes, flood. Like,
Yeah, they
somebody,
will, and that's why.
is everybody
They
high
do,
there?
and for those folks who have that type of physical exposure, like a good bit of Florida, they're going to have the same score.
Okay.
And that's why for most of these factors, you see that we fall in the largest bucket of those in the power sector. There's not a lot in here that is specific to GRU that they're not seeing in other folks who have that same physical climate exposure and the fossil fuel mix that we do.
So even, I guess I was consider, my question was closer to, given the context of, I would like to see a utility in a state that doesn't have problems, because I'll move there. Like, tell me where you don't have natural disasters. Like, that context doesn't really matter. They're just like, 1 will stay empty. We know that.
Yes, they are not. I think if you ask the Moody's folks that question, they would tell you that they don't assess people on a relative basis. They assess people based on what they believe their particular risk would be, because at the end of the day, their job is to convey to the investment community the relative riskiness of investing in a particular entity. So the fact that
Risk
90 other
still
utilities
exists.
have the same exposure is not going to impact the manner in which they score GRU.
Okay. Well, I mean, it's good to know it's not us. It's like everyone, California's utilities are getting a 5, I'm sure.
And I may not have emphasized that, but that's that last line. That's really the case. We are
Yeah. We're right there.
about average
Yeah.
for other utilities.
Is passing? Average is passing? I'll take that. Thank you, sir.
I have a question for you about the carbon transition. If we managed to somehow bring 50 megawatts of solar online, would that move the needle, do you think? Or is, I mean, that's not a huge percentage of our total, so I can't imagine it would.
Yeah, obviously it would be positive in their eyes. Whether it would be enough to move that needle, I shouldn't offer an opinion, but I would think not.
Yeah.
It's a step in the right direction, and if they believe that it's indicative of the manner in which we're going to go in the future, then
Right.
It might.
Do the other rating agencies feel the same way about biomass? Or
You know, it was interesting because I've not heard either one of the other rating agencies express it in that way. They were very, very outspoken about it, and probably because, you know, we were speaking of it specifically in the manner in which it impacts what they do. So I honestly don't know the answer to that question.
Okay. Okay. All right. Commissioner Santos, nothing. Okay. All right. Commissioner Tucker.
I move that we recommend this report to the whole commission.
Your second. All right. Motion and second to move this to the full commission. Any public comment? Thank you, Mr. Bevan. All right. Back to the commission. All in favor? Aye. Any opposed? That passes unanimously. Madam Clerk.
Next item is 211258, Environmental, Social, Governance, Investing, and Socially Responsible Investing Analysis.
Mr. Chairman, committee members, William Johnston, I'm the investment officer for the city.
Welcome.
And I apologize for not having page numbers on our presentation. I'm not sure if you'd like me to walk through the entire presentation or if you want to focus on certain pages. There is a fair amount of information in here. Do you have a preference for how?
I've already read it. How do y'all want to approach it?
Good if you want to cover like.
Yeah.
I'd be fine if you want to cover like the highlights of what you think is
Sure.
most important, just, you know, for record.
So this presentation, you know, it's actually something that we look at on a regular basis, the ESG and SRI investing. And on the second page, I give you sort of a brief overview of what these terms actually mean. ESG refers to environmental, social, and governance concepts. And as far as investing for the city goes, it would involve looking at companies that have higher rankings or higher factors and scores in these areas based on their policies or business models or even what products they produce or services they produce. In contrast, the socially responsible investing is more of a restrictive policy where you look at companies that are viewed more negatively, such as gun manufacturers, alcohol, tobacco, and that sort of thing, gambling, and you restrict investments in those companies. Again, we've looked at this, probably 4 or 5 times over the past 25 years, and the approach that staff takes is really we try to be an objective, prudent investor in our views, and I understand that the committee members and commissioners in general, you may have a different objective than that. But as far as this presentation goes, we do not recommend.
Mr. Johnson, if I could just interrupt quickly. I don't think anybody has the intent of not being a prudent investor. So let's stipulate that.
Sure.
Okay, thank you.
I'm sorry. That's the term that's
Yes, I understand.
used, in much of the legal language for how we're supposed to manage the pension plans and other investments for the city. That's why I use that term. In any event, we've always recommended against this for the reasons listed here in general and specified throughout the presentation. Staff's views are that ESG and SRI mandates can negatively impact investment returns, which is a major concern that we have. We also feel like they're subjective, they're difficult to analyze and to continually monitor and keep in check. As far as SRI investing goes, there's a creation of a restrictive precedent where a lot of people have different ideas about what you should restrict and not. And so if you open the door to one idea, then you're sort of creating a precedent where a lot of people can come in, and everyone has certain types of businesses they don't approve of. And second, lastly, there's, with respect to the pension plan and the retiree health fund, at least, there's a question of fiduciary duty, and I believe that the The city attorney has prepared a memo related to that as well. To back up just a little bit, when we talk about the ESG and SRI investing, I'm focusing on three of the city's main investment components. One is the operating funds of the city, which is really the cash that we have on hand that we invest in short-term investments and fixed income products. That the city commission acts as the director of that fund. There's not a fiduciary liability associated with that fund, and so we're more flexible in what we can do there. With respect to the General Employees Pension Plan and the Retiree Health Fund, those are trust funds, and the commission does act as the board of trustees for those funds. So there are some other considerations to take into effect. I can walk through, the funds in general, the more detailed, considerations that I think you should consider for ESG and SRI, but is there a particular area you would like me to focus on?
Did you have a question now, or? Okay, Commissioner Simon.
Thank you, Mr. Johnson. And I understand, I think when we talk about like best interest, we should specify what it says, like best financial interest. Because I could say it's in the best interest of someone that guns not be freely accessible. It's like, no, but it's best financial interest. And I think that's a very key difference. Thank you, Supreme Court. So we can't say like, this would be better for the planet that you live on.
Right.
Doesn't matter, correct?
We tried to leave that out of our assessment for a couple of reasons. The managers that we use, the professional investment managers that we use for the pension plan and retiree health fund investments, they already consider many ESG factors in their investment analysis and decision-making processes. So we prefer as staff not to try to overlay those existing factor analysis that they're doing.
I understand. Is there a way, I know because we use multiple managers, or I guess we just changed it we changed it 2 years ago? According to the memo we got, we changed like our managers, I think it was the city attorneys or the charters memo that said we changed back in July 2020. I have it somewhere.
It was in the agenda item, and it was, I think, one of the managers.
We changed
One
what?
of the retiree health insurance.
Maybe. I know we changed a manager, what have you. Like, is there a way to get, if you say they already kind of look at some of those ESG factors, is that written somewhere? Is there like a written policy that they have of like, these are things we take into consideration? Because if they're already doing some of it, that may be sufficient for us and for the whole commission to say,
Sure.
That's a step in the right direction. We feel that's comfortable. That way we're not, adding on.
Right. I wouldn't say that there's a list of factors because it's going to vary by company, by industry sector, by all of these things. And also by time, because over time, any given company's, if you want to call it a ranking by a certain ESG factor, it's going to go up or down based on different market events and company organizational policies. So
I understand that, but I figured, I would assume they're still written somewhere.
So
Because you don't tell one person, he tells two, and they tell two. Like, that's not how a business is run.
with respect to the Retiree Health Fund, the consultant for that fund is Morgan Stanley. And they have an ESG factor analysis system that they are able to use to analyze the managers that we have in our portfolio. You mentioned before that a couple of years ago we'd made some changes. That was part of that process. The former city manager had directed us to go ahead and make changes to replace existing managers with managers that ranked more highly in the ESG factors that Morgan Stanley was able to analyze. Morgan Stanley does that as sort of an analysis, part of their consulting and custody service. State Street Bank is our custodian on the pension plans, and they don't provide that type of service. Each manager for the pension plans has their own investment policy and procedures and processes. We can certainly ask those managers to provide some feedback on how they integrate ESG analysis into their decision-making processes. realize a lot of that is proprietary, internal,
There's the problem, got it.
right.
Well, I mean, if there's no harm in asking, like if
Right.
they say no, it's proprietary,
Well,
fine.
and they will give us I think that what we could expect is to get some general feedback without specific details, but we can certainly ask for that and get as much detail on it as you like.
I think that would be something I'd like. I won't speak for my colleagues, but I think I think it's a comfort to us and our community, like, no, like the people who do this for us do have standards.
Right.
These are the standards.
Sure.
So even if we can't pass something,
Right.
especially for the pension funds and the health fund, like, which are, a higher responsibility and limitations, the people doing it do have some standards. This is the general direction of those standards. I think, given the limitations of law, for me, that would be enough at this point for now. So if they are, able to do that, I'd be very grateful. As far as the other, this is going to be a dumb question. How many funds do we have?
How many funds?
Separate funds do we have?
So
And how are they
I tried
grouped?
to address that a little bit with the presentation. The operating funds, as I mentioned, are more or less the cash for the city, and we manage that internally. And we use various short-term investments, such as the state's local government investment pools, which are basically money markets accounts. We also purchase short-term bonds, treasuries, agencies, investment grade, corporate bonds, commercial paper, things of that nature.
That is still all under operating.
That's all under
We have one.
operating, and my department manages that. Secondly, we have our pension plans. We have two pension plans. We have the general employees pension plan and the police and fire pension plan. Thirdly, the last one really is the retiree health insurance trust fund. It's not a pension plan. It's what is called an OPEB, which is an other post-employment benefit trust. It is a trust fund, and the city commission acts as the board of trustees both for the retiree health fund and the general employees pension plan.
Okay, so 4.
4.
Technically, okay. And no, 3 technically, although one might not be a trust fund, basically act like it.
Right, 3 are
Okay.
trust funds.
So operating funds, that being general government and GRU, everyone together.
No, general government is managed separately than GRU.
Okay,
They have
so-
their own investment team at GRU.
So 5.
Well, 5, yeah.
Okay.
I'm sorry, I
I'm trying to keep,
always speak for general government. I don't typically include
Okay, so
GRU,
5.
But 5.
3 are technically, we can't touch it.
Is 5 right? Just one at GRU? Okay.
So 3 categories, 5 funds. 3 are untouchable because, we can ask for some info on how they already do it. That's about our limitation. The other 2, I know it says like, it's actually like a secondary market, so they're not really like
Well,
buying directly.
with respect to the operating fund, which is what I manage, we have made changes to the investment policy there, and we have restricted investment in fossil fuel companies and private prisons. And at the June 2nd City Commission meeting, an updated policy statement will be going for review and approval, and it restricts investments in Russian and Belarusian companies. With respect to that investment policy and those investments, it's much easier for me to manage that. And if the city commission, if they want to place restrictions on certain industries within that fund, it's easier for us to manage because we do invest that internally to the city.
Okay, so that's where in theory we would have any power
Right.
to look at this direction,
Well,
if we continue to want to.
I don't want to say that the city commission doesn't, or the board of trustees doesn't have power. They do, but I believe that, and I think the city attorney would agree, that power is balanced by the fiduciary responsibility.
Fewer restrictions over here, more leeway,
Right,
more say, let's put it that way. We have more say, not,
correct.
okay. Do we internally, I know you just mentioned we don't do private prisons and we've reduced fossil fuels. Is that in a policy memorandum somewhere? Is that like listed, like, since when did we start that?
That started in, I believe, 2018 in response to the city commission requesting that be done. And since then, we haven't had any other similar request until earlier this year when the request was made for divesting and restricting Russian and Belarusian securities.
So that's-
So that's what's going to the city commission on June 2nd.
So that's 3 restrictions.
Yes.
I'll ask because we'll see if there's a problem before we try to find a solution. Do we have any, we'll call potentially problematic to public view, investments in the operating fund?
No, currently the operating fund is 100% invested in the state SBA Prime Fund, which is a local government investment pool. They do not hold any Russian or Belarusian securities, underlying securities within that fund. Depending on, what your view of different industry sectors are, they may hold some there may be some investments in those types of industries. We are moving into a more active investment for the operating fund, where I will be buying treasuries and agency bonds and corporate securities. And, we'll be doing that in adherence to the policy. So we will not own anything that, the commission considers problematic.
Okay. Thank you. I appreciate that. That's a lot of work and a lot of questions, but I appreciate it. Thank you.
That's fine.
Commissioner Santos.
Thank you, Chair. I kind of wanted to the ECG considerations slide, and then investing in a company's stock doesn't provide. I mean, there is no direct revenue to a company by investing in it, but I mean, stock prices are driven by supply and demand of how many are on there. And
Sure.
a rising stock price gives companies more leeway in terms of getting debt and being able to do share offerings and things like that.
It certainly provides higher earnings. Well, a rising stock price doesn't necessarily provide higher earnings. It
No.
may reflect higher earnings, but you see a lot of stocks these days which are sort of momentum stocks,
Yeah.
where the prices rise regardless of forecasted earnings or even zero or negative earnings of the stocks. A higher stock price basically makes the shareholders wealthier, but most of the shareholders are not the company.
Yeah.
Companies do own some of their stocks often, but they're not the majority shareholders. There are, if you look at the directors of companies, they will often own stocks, and so will the presidents and executives of the company. So a rising stock price does benefit them as well as other shareholders.
Yes, but also, I mean, a higher stock price, companies may do stock offerings and things like that at that time to take advantage of that to raise capital.
Well, a stock option is generally granted to an employee of the
I'm
company.
not talking about employee. I'm talking about, I mean, companies sell stock sometimes when their stock prices are high
If the
to
prices
raise
are high,
capital.
you're correct. They
Yeah.
may choose to do another offering,
Yeah.
an initial public offering, or a second phase of an initial public offering.
Or depending on their cash needs of
Right.
capital needs a lot of time.
Right. I mean, typically, the company's options for raising capital are either through debt,
Yeah.
bond issuance, or stock issuance. Debt is an easier process for them to go through. So usually after an initial public stock offering, they will focus on debt issuance. But there are companies that occasionally do secondary
Yeah.
public offerings.
And then also you have to have certain stock prices to be listed on exchanges as well. Every exchange has different kind of parameters of their stock price as well. So there are some impacts to that too.
Right, there are minimums to be on certain exchanges, but those minimums are
Yeah,
pretty low.
they are, yeah.
Several, $2 or $3.
So I do want to talk about the fiduciary duty aspect. I think there's been, at least for me personally, it's not about like doing the right thing per se of like, oh, we need to do this to do our values, and to an extent it's, for me, it is a fiduciary duty aspect of where we invest in because of the midterm and long-term effects of those companies and how they may affect the overall economic conditions. And that's where I'm looking at it in terms of fiduciary duty. I mean, we had the last presentation, we talked about climate change and the risk that GRE faces and other faces. I mean, that's the same risk that other companies may face as well. So
Right.
there is the impacts of climate change have could be negative to our economic conditions. Similar to, I mean, the war in Ukraine has created significant economic issues worldwide right now. And kind of where we invest in that can have aspects of that. So that's where I'm looking at it. It is a fiduciary look at it of how we invest may impact the economic conditions in the future. So I believe we do have looking at it that way.
And I would say that, what you're speaking to there, those are the factors that our investment managers will be focusing on already. Just as, GRUs, the analysis that the rating firm does on GRU is incorporated into their bond rating. So investors are able to see that rating, and if they understand how it's arrived at, they see that it's already built into an analysis of the risk of that company. And our investment managers are doing a similar process for all of their companies they're looking at.
Yes, but there is probably some investment managers may look at things differently too. I mean, that's kind of
There's such a,
Wide
there are
variety.
hundreds of ESG factors, and it really depends on which, our managers are supposedly experts, and they're trying to determine which ones are going to have the greatest impact and effect on the stock's performance. So again, they're looking at it from primarily a financial point of view.
Okay, thank you. I'd like for us just to bring this back in August. Just kind of think about it. I'd like to talk to some other individuals in terms of the unions and such like that, but bring it back for discussion in August. Thank you, Chair.
Is that a motion? Or are you gonna wait?
I'll move it. Or yeah, I'll see what Commissioner Rocco says.
Commissioner Sacco.
Thank you, Mr. Chair. So Commissioner Hayes, I don't disagree as far as like fiduciary duties, like very fluid in the vernacular. Like, yes, I have a duty to so many things, but, and I hate this because I hated labor law, the standard set out is, focused solely on the financial return, not the economic return, not anything else. Like, if I invest here, is that steadily growing stock? Will it give us a bigger payout? That is, like, when it comes to the pension funds, like, that is what we are stuck with. Like, that is like a bubble you can't really like think outside of, or you will get sued if someone feels the need to. So I'm hesitant to even touch that line right now because of the amount of case law on it. Like, I don't want to spend Mr. Johnson's time or other people's time chasing down something that's, fairly settled at a court high above one we have access to right now. I don't disagree with the intent. I don't. But I don't want to focus our energies or staff's energy on that particular issue for those funds that we're really restricted to. I would love to come back and talk about this, especially if we can get some of that information back from the operating fund managers.
Well,
And then even information from the ones on pension, so we see what their standards are. If they can give that to us, we can have a second discussion. But as far as have staff come back with more, like the Supreme Court's kind of like that end of this, where else do you want us to look? So that would just be I would love to come back and have another discussion in August. I'd like to see what our managers do already consider. If possible, a list of I know because they change all the time, but a list of usual industries we invest. Because I know he said he would put it in the SBA, but what do they do? And the one that we're moving it to, what industries do they usually invest in? Like a broad bucket category, not here's every single company.
we can provide as much or as little detail as you like. I mean, every manager provides us a list of their holdings on a monthly basis, as well as their industrial sector weighting compared to their index benchmarks.
I think industry might be best overall because I won't know the official name of one company versus another. So I think industry, broadly speaking, where are you investing money would be good enough for me.
Okay.
because I can only imagine it'd be hundreds of other ones if we go by company. No one's gonna read that. I mean, you do, but we pay you for that. So I'd rather see what standards already exist before we give staff more direction than that. They already have other jobs. That's kind of where I stand as far as like what the next step is on this issue. Is get us that information, then we have another discussion before we start talking to unions about, hey, do you mind? Because I don't think, are they even allowed to make that call? Are you allowed to like kind of waive that fiduciary? I guess this is a Mr. Need question. Are you even allowed to, as the beneficiary of those funds, are you allowed to like waive, like, you know, best interest here, best financial interest, and say like, yeah, it's okay if you like have new standards that technically go against this?
I don't think so, Mr. Chair. And the other thing I was going to add is this may bridge the gap between the concerns that Commissioner Santos has and Commissioner Sacco has, is the point to realize to whom the fiduciary duty is owed. That's the key factor you're missing. While we might all have a duty to heal our planet and duty to address firearm massacres and any number of other things that we want to do, this is a fiduciary duty that is owed distinctly to the beneficiaries and their and participants and their beneficiaries. So it's a very specific duty, not the sort of duty that we all may feel as a duty of good governance or a larger concept of the duty.
And even then, like, those participants can't waive and say like, yeah, disregard this.
The statutory duty is laid out in the memo here, is that to act solely in the interest of the participants and beneficiaries for the exclusive purpose of providing benefits to participants and their beneficiaries and deferring reasonable expenses of administering the plan. So as to the general employee pension plan, that is a very high and very tight duty.
So I think the question is like, they can't waive it. Like, it's set by statute. You can't, like, I can waive like attorney-client privilege. I can't waive this fiduciary duty and say like, yeah, go invest somewhere.
I don't think they can, Mr. Chair. I don't think there's any mechanism for that anyway. We don't have a collection of pensioners and potential beneficiaries and beneficial
Yes,
owners.
We're not the post
one
office.
issue you would run into is that the unions represent active members of the plan, but they do not represent the retirees. And I believe the fiduciary duty extends to the retirees. There's not really a bargaining unit for them.
There wouldn't be a way to get like every participant to kind of sign on and say like, yes, because even then next year you'd have different ones.
Nor is there, to me, for example.
Like, I mean, there's probably a way if there's a will, but
This is about conflict, basically, right? And to be perfectly honest with you, of all the people sitting up here, I'm the only one with a real conflict. I am a beneficial owner of the plan, and I don't. As again, I don't think we can waive that duty as set forth in the statutes and in your ordinances. And even if we could, I don't think there's a mechanism in which you could organize the various labor groups, the unrepresented employees, and all of the pensioners, and their benefit, and their survivors. And even if there was, I think there's a concern as to the minority rights amongst that group. Just because the majority of those people want to waive it doesn't mean that those that are remaining want to have the duty owed to them compromised for their financial security.
thank you. This is why I didn't go into trust and estates. Okay, yeah, so thank you both. I think that kind of flushes out like my concern in taking any like further action than get us back this information for a second discussion of what those options could be with those limitations in place. And that's what I would approve of. Like I don't want to send staff like on a hunt for something that we may not need potentially, or that is not legally allowed. So yeah, thank you, Mr. Chair.
Thank you. Mr. Santos.
Thank you, Chair. And I don't think anybody's talking about waiving things, but what I was saying is that, so we have a fiduciary duty to the beneficiaries of the trust. That is how so we would not go and invest in some company if next week it's going to be made illegal to do prohibitions we're about to have another constitutional amendment, the prohibition is about to happen. It would be not prudent to go and invest in alcohol companies because of that would be a risk to that. And so, yeah. So that is a fiduciary duty of how we pick and choose, maybe based on things beyond today, exactly financial benefit, but this is long term. And that's where the thoughts of how we invest in what we invest in, because there could be effects based on, by investing in a ton into fossil fuels and trying to get more gas drilling and things like that, may result in increased greenhouse gases and increasing the effects of climate change, increasing weather effects, which could have a negative economic impact on the U.S. economy and in general of companies having to spend more money on mitigating climate change, which that means that those profits can't come back to the owners and beneficiaries. So that is why I'm saying I think it is I think it's something to look at, but I'm just saying it is in our fiduciary duty to look at the impacts of the long-term economic impact, because when the economy is doing well, our investments do well. Usually, I mean that sometimes I assume we're not playing too many crazy games of betting against the economy, but we certainly do sometimes. So that's why I do believe it is in our fiduciary duties. We can look at it, we can make that decision. It's how far do we want to look at that. I'm just saying we should come back in August and discuss again. I'm not asking staff to do anything. I just think that I just want to be clear that I do believe it is in the fiduciary duty of us to decide where we invest on, because of the investing in certain companies may have a long-term negative impact on the economy. And in general, that would be a negative impact on our beneficiaries. Thank you, Chair.
Thank you. Commissioner Sacco.
Thank you for that clarification. So I think that is part of what we've asked in the operating funds, where the fiduciary duty there is less, I don't want to say less strict, but it's different from the one in the pension funds. And I think there we can do what you're saying. Like just, we can take that, or rather we can take those impacts further into consideration. But I want us to be able to, for us, for the public, for anyone watching, like those are two separate fiduciary duties that are like differently defined. Because it's not just like, not all fiduciary duty is created equal. So I think it's, if staff wants to see how that is possible in our own, and if they already have policy and they have been working, like, yeah, bring that back, explain to us how we've done it, and we can talk about how to, expand that if we so need to. But I want it, like, as far as direction to staff, like, to be very clear where we're asking for what. Because, like, in this chair, but also as a lawyer, I don't think it's possible to look at the pension funds like that. So I'm not going to support that because I think it runs against all of my training. And I don't think it can be changed unless you want to go all the way to Supreme Court, and we're not going to win. So I think there's no, I think it's good to ask staff to come back, like, what do we already do? What could we do? And have their recommendations on the operating funds for that, but not on the pension funds. Thank you, Mr. Chair.
You're welcome. Commissioner Sanders.
Thank you, Chair. On the operating fund, there really is no fiduciary. It's just city-owned money in essence, and we have a duty to taxpayers to spend it in a
trust fund. It's the city's cash, and you
Yeah,
can determine how you want to restrict it.
It's more about how we just spend government funds in normal. They have to be
Right.
done can't do self-dealing and things like that, but how we, so on the pension funds, I don't see, looking at the economic conditions in the future and how those impacts are, it's not outlawed by the Supreme Court. I don't see that, and I don't know where that is of us being able to look at the companies we invest in, and if those companies will have negative impacts on the future economic conditions. I don't know where that is not allowed. But I would also move that we would bring this back for discussion at the next Finance Committee meeting. Thank you, Chair.
It sounds, if I could interrupt, it sounds that like you are requesting, you've already sort of made a request that staff provide more information about the ESG and SRI type analysis that's being done by the investment managers for the general employees pension plan and the retiree health fund. And I think we can provide you some information there, and that may address some of the concerns that the committee has or the commission has, and maybe at that point you can determine how you want to proceed.
Okay. Commissioner Sacco, did you have a second for that?
Yeah, second.
All right, so do we have a motion on the table to apply this to the next agenda in August as another discussion with more information back to us? And I would just briefly weigh in to try to alleviate concerns and give my position on what we're talking about as opposed to trying to interpret anyone else's position. When I have acted as staff, as an executive director, and reported to a board, never for billions of dollars, but for millions of dollars, I have consistently assumed that if the board asks for more information, that's not a challenge, but rather it's an intellectual curiosity and part of their fiduciary responsibility to understand what they're doing. Because we do occasionally, make decisions to approve, disapprove things, and to do so without honestly having made some effort to understand what we're invested in is a breach of fiduciary responsibility. So that's what I'm interested in, just to make sure that I have some general understanding as a commissioner of what we are investing in on behalf of the beneficiaries. I'm not saying we should go in any particular path. I'm saying that if we don't understand what we're voting on, shame on us. So I wouldn't want anyone to feel challenged when we ask for these things. It is easy in these situations, and I've seen it happen in much smaller organizations and large organizations, for that challenge feeling to exist. And I don't believe that's what anyone's trying to accomplish here. What we're trying to accomplish is to make sure that we understand so that when we vote, we have done so in good conscience and that we can back up our votes. You all are going to be here longer than any of us, and you are charged with a responsibility to make sure that your job is done correctly. And the beneficiaries want to know that their money is taken care of correctly. All of these are very rational positions to hold. And I want to be careful that we don't walk out of here with a different understanding of what we're trying to accomplish. It is also true that the world around us is changing pretty fast, and that there are risks that we don't even know about, that nobody in this room and none of our managers are aware of at this point. Some of those are natural world issues, and some are man's inhumanity to man issues, and they're just things that happen that we don't know anything about, and those things seem to manifest themselves with greater frequency than they have in the past. Maybe it's just because that's the time we're living in, and maybe it's always that way, but we're responsible for it now, so maybe we just feel it differently. But those risk patterns are something we should be aware of and that we should ask questions about. So that's, I think, where all of this is coming from. It is also true, and I went back to make sure I get my quote right. We're not going to act on this, I don't think, but I believe where your treasure is, there will your heart be also. And I think that is important, and it is something that matters and that we should have an account. So with all that said, if there's no input from the public on this motion, I will ask for the committee to vote. All in favor? Aye. Any opposed? All right. Thank you very much. I appreciate the effort that's gone into
So
this.
we will come back with some more detailed information about the sector analysis and maybe industry analysis that of how our pensions are invested and the ESG analysis process for some of our investment managers.
Yes. That'd be
Very good.
helpful. Thank you. Okay. Any general public comment? All right, didn't think so. Any member comments? Commissioner Santos, you got anything there? No, you good? Commissioner Sacco? Okay. All right, next meeting is August 31st, and we are thus adjourned.